Enough from me. I have great pleasure introducing Peter Bobbin, who I've had the pleasure of knowing for a large number of years. Peter has a Master's of Taxation, Bachelor of Laws, and very usefully, I would have thought in this area, a Commerce degree in Accounting and Finance. He's well known in the profession in relation to his expertise in estate planning, superannuation and taxation. I don't know if he's still involved, but he has been involved in developing Australia's first Master Financial Planning for the University of Western Sydney, and he continues to act on a project basis for each of Australia's major financial institutions, and most of you will know is a regular presenter at these types of sessions. What isn't in his bio but is very important, last year Peter was appointed as the Chair Australia of STEP. STEP, for those of you who don't know, is a Society of Trust and Estate Practitioners, an international body of trust practitioners, primarily I think made up of lawyers and accountants and possibly some financial planners. Peter, dare I say it, is close to the tax office in terms of liaising a lot with them, and is well qualified to talk on the topic, what attracts the Commissioner's attention. Before Peter starts, because we have people online, and that raises difficulties in coordinating questions, we're going to leave questions till the end of Peter's session, so please make a note of what you want to ask, and I'll allocate some time at the end to deal with questions. But when we get to the questions, we'll probably have to repeat what you say unless we quickly run around with the roving mic for the benefit of those who are online. Thank you, Peter.
G'day. How you going? What I'm going to present to you in the next 45 minutes is really critical. It's huge. It's a problem. It's a major problem. It's a major problem that's brought about by the design of the Australian taxation system. Trusts are the single most utilised vehicle structure, call it what you will, in Australia today. There are in excess of 1.5 million trusts minimum that lodge tax returns. Now, I'm including the 800,000 family discretionary unit trusts, and I'll add the 650,000 SMSFs and the small smattering of larger institutional superannuation funds. If you then throw on top of that the bare trust as it relates to superannuation borrowing, testamentary trusts, lodgement of trust tax returns in respect of deceased estates because everybody dies, trusts are completely throughout the Australian financial system, and it is in a terrible state for two fundamental reasons. One, none of you know what you're doing, and you're not doing it properly. Two, the reason you're doing it is because the Australian tax system drives us toward trusts. And part of the problem you'll get later today is all of the changes, particularly what my colleague Yung Lam will be coming in and talking about, changes to Division 7A and the activity of the tax office in the trust reimbursement area of Section 100A. It's because there is no proper perspective being taken on this issue. Quite simply, all of the trust issues will fall away if companies were taxed on a transparent basis. All of them would fall away.